Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is our latest offering, What's Hot, the show that focuses on all the latest buzz on the D Street. And today we have a lot of action that you need to track on the D Street. First up, there's the Fujiyama Power listing that you can see on your screens. And the stock has listed at a discount to its IPO price. So it's a weak listing, as we have seen. Some of the visuals are coming in on your screens right from NSE there. A 4% discount to the IPO price is what we have seen Fujiyama getting listed at. Remember, the IPO price was 228 rupees per share and the stock has listed at 218.4 rupees and this is on NSE and 220 rupees on the BSE as well. So this is at a discount to the IPO price. So those investors who had got the shares allotted have to wait probably to see whether this stock really picks up pace, but the listing price has been on a muted note, on a weaker note as well. This is despite the fact that the company had delivered robust performance in FY25, its revenue climbing by 67% at 1550 crores. PAT surging by 245%, that's profit after tax, to 156 crores. EBITDA, that's the operational profit of the company, also rising to 248 crore rupees, more than doubling on the back of improved operating efficiency and better product mix. We have seen a muted listing coming in for the company. The company IPO had also got a 2-time subscription, so the IPO had got fully subscribed. When we talk about the overall space, but and the company in fact supplies a wide range of products from rooftop solar ecosystem, covering on the on-grid, off-grid, hybrid solutions as well. It offers solar inverters, panels, lithium ion, as well as tubular batteries, as well as multiple power management units as well. So it's all with the kind of upcoming themes or sunrise sectors of solar that we've been looking at. That's the clear listing that we have for you. Let's focus on that with our guest also on board. Sunny Agarwal is joining in from SBI Securities to share with us his view on the markets and to share with us what do we expect in the markets going forward. Sunny, warm welcome after a long time, getting in touch with you yet again. Good to have you back. Tell me, what do you think of this new listing that has happened, Fujiyama first?
Good morning, Sakshi, and good morning, everyone. Always a pleasure to interact with you. Regarding Fujiyama, first a disclaimer, SBI Capital Markets, our parent company, was a merchant banker to the issue.
Okay.
So we have not assigned any rating while releasing our IPO note. But again, a well-diversified company in terms of solar side. So if you look at the company has got 1,000 megawatt of solar panel manufacturing capacity. Solar inverter and electronic is closer to 1700 megawatt. Lithium-ion battery is closer to 500 megawatt and tubular lead-acid battery is closer to 1300 megawatt. And they have got a very aggressive expansion plan, wherein if you look at most of the product capacity is likely to double over the period of a year or two. As we speak, obviously the valuations are slightly stretched, trading at closer to 44 times price to earning multiple. And that is the reason we are seeing a kind of muted listing today. But again, it's a long-term story. So in case, on a pan-India basis, we are seeing 40 to 50 gigawatt of capacity getting added every year. And I think there is a place for each and every solar related businesses to get a pie of that. So I think it's a long-term story. Obviously, the listing is muted on the back of slightly stretched valuation, which we have seen at the time of IPO.
Okay, got that. Let's also focus on the listed market. 26,000 is back on the Nifty with us. Sunny, do you see, yet another time when we will probably see selling pressure at these levels? At least 3 to 4 times we've seen the Nifty climb up beyond 26,000. But every time we've seen some selling pressure and 200-300 points gone there. What is the suggestion right now on the Nifty? And do you see Nifty retesting its erstwhile record highs anytime soon?
Definitely. I think if you look at the construct of the market, predominantly large caps are driving or holding on to the market, and 80% of the universe are trading below their life high or trading below the high which we have seen during the month of September 24, when the market was at a highs of closer to 26,300 as far as Nifty is concerned. But one positive thing is that both the large or heavyweight sector sectors like banking and IT, they are doing pretty well. So we have seen a bank Nifty scaling life high yesterday, and at the same time we have seen a kind of a bounce back as far as IT is concerned on the back of likely expectation of trade deal between US and India. And most of the negative as far as IT sector is concerned is already priced in, whether it is in terms of muted growth, which we have seen during the first half of FY26 and second half of FY25. Now, Street is hopeful that in case there is a trade deal between India and US, there can be an likely upgrade in terms of guidance, at least for FY27 for an entire IT pack. So two heavyweight sector, banking and IT, holding on and showing a positive momentum. So that is something which will likely to pull the Nifty to a life high very soon. I am hopeful that post the life high we see on the Nifty, maybe broader market, at least we can see a stock specific activity. So stocks from certain sector like auto ancillary, we have seen a very strong momentum, very strong number delivery during this quarter. So that sector can start contributing in terms of additional growth. NBFCs and PSU Bank, again, both the sectors are looking pretty well in terms of medium to long term investment horizon. Another a few smaller pockets which we like in the entire markets are value retail segment, or for that matter PEB, structural steel tube. So these are the few sectors which have delivered solid set of numbers during the quarter two, and outlook continue to remain optimistic from a medium to long term perspective.
Got it. So those are the key sectors in the markets, viewers, that you can definitely keep an eye out on, where our guest is truly optimistic about where the money could be moving. Look at the markets, we are above 26,100 now. You can clearly see, a spike that's taking place right now. We have FMCG, auto, IT as the three clear sectors that are buzzing. IT, remember yesterday also it gave a lot of wind to the markets moving higher. Even today, TCS is the top mover. You have Tech Mahindra among the top movers as well. So all of these IT packs are moving. FMCG stocks are about 0.5% higher. Auto stocks also are buzzing in trade. But when we're talking about the IT space, remember Infosys buyback opens today for all those eligible investors who had the Infosys stock in their portfolios by November 14. So you are eligible to now tender your shares in the buyback that is open today and will be open up until November 26. Now here are some of the things that we will be talking to you about and how you can really make up your mind whether this buyback is a good opportunity for you to really enter into. 18,000 crore rupees of a buyback that Infosys has announced. This is the biggest buyback for Infosys in its history of buybacks that we have seen. The price that they have fixed is at 1,800 rupees each. Remember, even from the current market price of somewhere around 1,550 odd levels, it's still giving you that 250 rupees of an uptick if you tender your shares right now. Remember, the record date was November 14, so only if you have Infosys shares till November 14 in your portfolio, you will be able to definitely participate in that. That's the eligibility criteria for you. Let's try and understand from Sunny as to what are the things that you should know. Now, help me understand one clear aspect here, Sunny. Those who may be looking at this as an opportunity, what should they keep in mind? Should they look at this buyback to tender their shares back to the company for this 1,800 rupees and a 250 rupees kind of an uptick that they could expect to get? Or should they just sell their shares in the open market later on? What should they be really doing?
Yeah, I think obviously it's a good opportunity for a retail investor to tender the share in a buyback, a pretty decent return which we are getting. Although one has to keep in mind that a post-tax computation will be slightly different, as buyback has not have been taxed at a full slab rate during the last budget, and that can slightly reduce your overall return post-taxes as far as buyback is concerned. But anyway, if I look at two scenarios, what is the current fair value of Infosys as we speak, even if we assume that there is some upgrade in terms of earnings for FY27. So I think the consensus estimate stays close to 1,800 rupees, and that's the price at which you are getting an opportunity to tender your share. So I think it's a good opportunity for retail investor to tender the share in the buyback. and encash that money, and then maybe again you can redeploy the excess capital which you get from buyback again in the market in some other stock, or maybe again in the Infosys at a later stage.
Right. In fact, you pointed out correctly, it's the taxation aspect that everybody is focusing on right now, that you really need to understand well before taking that step of, participating in the buyback. But also remember that in case your holding was less than 2 lakh rupees, in Infosys by November 14, you come under the small shareholders category. And there, most of the experts are giving an idea that higher reserved quota will actually result in your better chances of acceptance, and therefore the acceptance ratio could be higher for you. So only if you are a small shareholder. A third thing that you need to remember is that promoters are not participating, have chosen not to tender their shares as well. That also slightly improves the chances of acceptance ratios for public shareholders at large, but it does not guarantee full acceptance. So for instance, if you want to tender all of your shares, will all of your shares get tendered? That may not be the case. Especially for larger shareholders, it will be even lesser. Smaller ones, it could be slightly better off. But let's try and understand the taxation aspect here, viewers. One thing that you must understand is that whenever you invest in stock markets, you have certain stocks which you want to take an exit in whenever you want to sell them. Long-term holding, 12 months or more will get you a taxation of 12.5%. But short-term gains are taxed at 20%. But when you tender your shares in a buyback, like Sunny pointed out, you will have to pay taxes as per your tax slab. So in case you are in a higher tax slab, then you may actually have a higher tax outgo. So keep that aspect clearly in your mind before tendering your shares there. Only Sunny, could you just highlight for those whose income is below 12 lakhs, who come under zero tax slab category, for them does it make a better chance or better sense to look at this one?
Yeah, definitely. I think the shareholder and in a lower tax slab will definitely benefit out of this entire buyback proceed. And at the same time, one has to keep in mind that the cost of share bought by the company will be treated as a capital loss. Either it can be short term and long term, and this can be offset against any other capital gain. So, guys who are in a lower tax bracket benefit out of both the aspects. One is since the tax slab is at a lower end or at a nil end, they will pocket the entire money in the form of deemed dividend. And at the same time, the cost of the share bought back by the company will be treated as an capital loss. So that can be offset against the capital gain. So I think it's definitely beneficial for a smaller shareholder, those who are falling in a lower tax bracket.
The Infosys aspect catered to and understood as well. Viewers, you have to definitely keep all of this in mind. Remember, from today until 26th November, you will have the window open to tender your shares. Current price is 1540 and the price at which you will be able to tender is at 1800. So you get that benefit, but remember the taxation aspect that you definitely need to keep an eye out on as well. Okay, Sunny, let's also focus on a lot of other brokerage updates that we are getting today. So many of sectors that are getting covered. So let's take your view there. First up, we have this view that's coming in from Bank of America, and this is largely on the India strategy. They are actually talking about how government capex is front loaded. Looking at the lower base effect, they have actually looked at the India strategy positively. They preferred rate cyclicals at this point in time. So financials, real estate and autos are their preferred ones. They also prefer defensives like hospitals, telecom, utilities. However, they are underweight on industrial, cement, steel, metals, energy and IT, at least for now. That's what Bank of America in their India strategy has mentioned. Some of the sectors even Sunny mentioned right at the open where he is positive on as well. So you could definitely focus on that. Apart from this, we also have a lot of other sectors that are in focus. Banks, for instance, is clearly on the focus. Today, Morgan Stanley has come out with a slew of reports on the banking stocks, on HDFC, Axis Bank, SBI, Kotak Mahindra Bank as well. So let's try and focus on the entire banking space, both large caps, private as well as the PSU banks there. Morgan Stanley has an overweight rating and a target price of 1225 on Axis Bank. They believe loan growth will be surpassing industry from FY26. They're positive on it. On Kotak Bank, they are saying that, we are overweight on Kotak Mahindra Bank with a target price of 2600. They believe this broad-based secured retail loan growth, NIM improvement expected from Q3 and unsecured slippages are trending lower are positive triggers. For HDFC Bank, they have a 1225 target price. Loan growth they believe has aligned with the industry. NIMs are seen improving from second half. Collections and delinquencies remain benign as well is what they are looking at. For Axis Bank, remember the target is 1450. I've already marked out. And the fourth one is SBI from the public sector space. Morgan Stanley has an equal weight rating there. Target price of 1025. Loan growth guidance is 12 to 14% for FY26. They believe strong fee income momentum for FY26 exit and NIM guidance is at 3% odd. So let's try and broadly understand what's happening on the banking space. Sunny, help us understand what's your thought there on the banking space, large cap private vis-a-vis PSUs, where the opportunity lies for investors ahead.
Yeah, on banking space, definitely the pressure on NIM is behind the entire sector. So we have seen that RBI has already slashed the repo rate by 100 basis points, and that was leading to a pressure on net interest margin. I think now most of the banks are pretty confident that beginning quarter 3, either NIM will stabilize or will start seeing an expansion beginning quarter 4 of FY26 in case RBI doesn't further slashes obviously the repo rate. And that gives a lot of confidence in terms of that the entire banking as a pack is likely to deliver a kind of 15% kind of earning growth. And on the top of that, we have seen that all the issues in a smaller pockets like microfinance or for that matter MSME that is behind the industry, and asset quality in these pockets have also relatively stabilized. Overall, asset quality continue to remain pristine for the entire banking sector. In terms of valuation, obviously PSU banks are trading at an relatively cheaper valuation as compared to the banks, and with an recent announcement of likely consolidation in a PSU bank, there is a probability that efficiency and further improvement in return ratios are likely within the PSU bank basket. So I think if somebody want to approach banking as a sector, there are two ways to it. Either you can build a portfolio of mix of private as well as the public sector bank, or you can take exposure through ETF like PSU bank ETF, which is again a well curated basket of all the PSU bank that gives an exposure to the entire PSU bank basket at one go. In terms of stock which we like, again as discussed by you, I think all the leading private sector banks, whether it is Axis, HDFC, or for that matter ICICI, Kotak, they are likely to do well over the next 3 to 4 quarters. On public sector side, obviously we can't share any view on SBI, but Bank of Baroda, Canara Bank, and Indian Bank, as well as Bank of Maharashtra looks well placed to deliver a decent earning growth over the next 4 to 6 quarters.
Okay, got that. That's as far as the banking space is catered to completely. Apart from this, let me also focus on some of the other key areas that brokerage houses are betting big on today. Let me actually pull up a few stocks from the new age basket that a lot of viewers may be looking at very closely. Morgan Stanley also has a view on Swiggy. They have an equal weight rating, a target price of 455. They believe that quick commerce is nearing break even. They better retention via differentiated assortment and potential fundraise will provide buffer also going forward to the company, and 455 is the target that they are looking at the current levels too. Apart from this, on the internet based companies, BofA on Info Edge has given an underperform rating, a target price of 1300. They believe Naukri may gain if GCC expands, and therefore the higher act poses some regulatory risk there. So these are some internet based companies that are in focus. Anything else within the internet companies that we have? Not so much, but these two companies. So let's focus on the internet based spaces as well. Anything interesting? What's happening with Swiggy, Zomato at this point in time, or any other new age internet companies that you are looking at, Sunny?
Yeah, definitely. I think this quarter we have seen again increase in competitive intensity as far as quick commerce business is concerned for the entire industry, and that is the reason we have seen slightly elongated path to profitability as far as quick commerce business for Swiggy and Zomato are concerned. But one good thing is that despite of rapid expansion on dark store, we have seen that Swiggy have retained their June 26 guidance of break even as far as quick commerce business is concerned, and that gives us a lot of confidence on Swiggy. We believe the fair value of Swiggy is closer to 480 rupees if somebody has got an investment horizon of 6 to 12 months. In addition to that, in the other pockets, car trade is the one company where we have seen a very robust profitability during this quarter. And now there was a rumor that even the second largest player is something that they are planning to acquire as far as this car and bike classified portal business is concerned. So I think that is the one stock which should be on radar. In addition to that, on insurance side, PB Fintech, again, they have delivered a solid set of numbers during quarter two. And with an GST cut rationalization, we have seen that there is an increased propensity of consumer to upgrade their insurance policy and buy an higher, a better premium policy, and that is leading to a benefit to an aggregator like PB Fintech. So PB Fintech is another stock from a new age businesses which we are recommending to our.
Okay, got that. Let's actually look at some of the new companies that have got listed also. Grow, day two, and of declines that we can actually see. We have had 5-6 days of a substantial move on the higher side, but yesterday we had a lower circuit, the first sign of sell-off after listing for Grow. Today again it's down by 8% and it's at 156 odd levels now for Grow at this point in time. Let's also pull up Physicswala that got recently listed. Again, another day of losses that we are looking at for Physicswala also. Yesterday also it had fallen about 7-8%. Today also it's down by about 7%, 7.5%. Now at 132 odd levels. Let's look at these recent listings and find out what is the view there. For Grow, almost an 18% plunge in the last 2 days. Did it move up too swiftly? Beyond the kind of valuations that would be justified. Remember, there was also this entire issue of how there was a short squeeze in the market. Short sellers were caught off guard. They did not have shares to give the deliveries because the stock continued to move up higher for 5 consecutive sessions. Ultimately, all these short sellers had to face penalties too because these stocks went in NSE auction as well. How are you looking at Grow, for instance, those investors who were first cheering the unstoppable rally for the last 5 days are suddenly now caught off guard, even though the stock is still above its issue price right now? For those who are still holding on, what would you say?
Those who are holding on since IPO days, I would suggest to book the profit in case they want to encash on the recent rally in the Grow. At current market price, I still believe the market cap is closer to 95,000 crore, and that's give closer to 45 to 50 times price to earning multiple, whereas the other listed broking players are trading at 20-25 times price to earning multiple. Although there can be some premium being a market leader in on the broking front, there can be some premium which can be ascribed to a Grow. But again, there is a stark difference in terms of valuation. At one end, the Grow is trading at 50 times price to earning multiple. On the other hand, most of the larger players like Angel One is also trading at 20-25 times. So I think maybe if somebody is planning to deploy a fresh capital in Grow, better to wait for some more time. And especially on Friday, that is tomorrow, the Grow will be declaring its number, a quarterly number. So commentary post that number will also give a lot of clarity in terms of the future growth path as far as Grow is concerned. So would recommend wait and watch at least for a day or two if somebody is planning to deploy a fresh capital in the Grow.
Okay, and what about Physicswala? How would you assess that?
Again, Physicswala, we have rated neutral. We believe the valuations are fair as we speak, and the clarity on whether the offline businesses, which is a cash burn business for the Physicswala, when will the path to profitability is something which will be seen for the entire company. So that again maybe a first earning call is something which street is waiting for, where the street will get more clarity in terms of path to profitability. So would like to wait on sideline, get more clarity. Maybe we will look for one more quarter number, and then one can take call whether one can add Physicswala at a current valuation in the portfolio.
Okay, let me actually focus on some more brokerage house reports now, some of the interesting ones that are actually coming in. We have one on Reliance Industries today, UBS report with a buy target and a target price of 1820. UBS believes refining strength will be lifting O2C earnings going forward. EBITDA, they believe, is seen rising. That's the operating profit also going forward from here. So that's the one report that we can focus on the large caps particularly. On OMCs also, UBS has actually given a report. Strong distillate spreads, boosting refining margins, diversified crude sourcing limits the geopolitical impact that we were assessing. So it has a buy on all three, IOC, BPCL, HPCL, and targets of 190, 425 and 540 respectively for IOC, BPCL, HPCL. So let's look at this entire pack. Reliance Industries, of course, a large part of refining is seen there as well, and OMCs from the downstream companies. How are you looking at them at this point?
Yeah, definitely OMCs are very well placed to encash on these lower or benign crude oil prices, and we have seen that all the OMC companies have reported very strong set of number during the quarter two on the back of very strong GRMs, so closer to $8 to $9 GRM we have seen for most of the oil marketing companies, and with benign crude oil prices and stable retail fuel pump prices in India, I think OMCs will continue to deliver a strong set of number at least for quarter three also. Within that, we believe HPCL, wherein their Barmer refinery in Rajasthan, where they have been spending very large capex since last 3 to 5 years, is on the anvil to get commission, and that will add a lot of earning growth for FY26. So I think HPCL definitely remain a top pick among the entire OMC pack. Coming to Reliance, I think there was some news that there is likely to be an increase in telecom tariff in the first week of December. If that is the case, I think definitely the telecom business of Reliance will see an earning upgrade. We believe the fair value of Reliance is closer to 1650, 1700 as we speak with an investment horizon of 6 to 12 months.
Okay, got that. We were talking about these new age companies. Paytm, there's a news flash there, has actually recovered all its lost UPI base, and that's after 2 years. And transaction volumes have yet again hit record high levels for Paytm. Look at the stock price performance in the last 6 months and gauge it from the last 2 years, and you will see the kind of volatility that the stock had been facing, and how in the last 6 months the stock has also gone up about 47-48% odd. That points to the kind of recovery, hope of coming back of good days was seen on the street as well. Let's try and find out whether this another positive will mean further opportunities for investors to look at Paytm even at 1282 odd levels. Sunny, how would you look at it? Lost UPI base has been recovered after 2 years now. Transaction volumes have hit a record high once again.
Yeah, definitely, and that is the reason we have seen a very good outperformance of Paytm in a very benign market environment. But at current market price, we believe that the market cap of company is closer to 80-85,000 crore, and it's fairly valued. So, although the company has started reporting a PAT positive number since last 2 quarters, but again, street will wait for further acceleration in the profit growth going forward. So at current market price, maybe I would like to remain neutral. Maybe buy on dip is the right strategy if somebody is looking to add a Paytm in a long-term portfolio.
All right, fair point. Well, on that note, thank you so much, Sunny, for being with us on the program today and helping us give all your insights on various topics that we've discussed today. Viewers, I hope this edition of WhatsApp has truly helped you out looking at all the buzzing action that you definitely need to keep an eye out on. We've discussed the new listings, the IPO space, of course, the recent listings of new age companies. We've also discussed the Infosys buyback for you as an opportunity over the next 6 days that you can look at and assess for yourself with your financial expert as well. And of course, we've given you an understanding of where are top brokerage houses really putting in their bets at this current stage. So we hope that this has truly helped you out understanding where the market buzz is. 26,120 for the Nifty. We've further moved up in the trade, 66 points higher. But let's see whether we will now further move towards 26,277. That was the erstwhile record high on the Nifty. Will we hit it, soon enough? Is something that is a question that we're asking all our experts today. Stay tuned with us on Business Today Television as market coverage continues on the other side. Of course, in case you have any questions about the stocks in your portfolio, join me at 12 noon as I come back with daily calls.